Well, I think the last 12 months have been very good for Rajhi Bank. We've seen double-digit net income growth through the first 9 months of the year. Our asset growth has been in excess of 3%, which compares with the market, which is actually down 1.8%. We've also been able to achieve quite a few of our critical initiatives, which I'm happy to talk about a bit later in the interview.
You've had, in fact, I believe 9 quarters of growth now. Islamic banks overall in the GCC have in general been more profitable than their conventional peers over the last couple of years. Is this a trend that's going to sustain?
Yes, I think we've seen Islamic banks now outperforming conventional banks globally for the better part of the last 10 years. And every indication seems to appear to be that that will continue. One of the big advantages Islamic banks have is much lower cost of funds, and by definition they take a lower risk profile, which obviously worked quite well, particularly during the turbulent period that many of us had to face a few years back.
So how is Al Rajhi shaping the Kingdom's financial landscape? What's your focus for 2018, and how does that fit in with the general economic thrust of the Kingdom's agenda?
Well, obviously we're very aligned with a national transformation program and the 2030 vision. When that first came out, we spent quite a bit of time as a team analyzing that and finding areas that we thought made the most sense for us. So, for example, housing plays very well in our focus as a retail bank. We thought SME would be a great opportunity for us to also participate in, and of course, with the increasing of females in the workforce, we thought that was also a great opportunity for our bank.
Well, Moody's says that Al Rajhi is, and I quote, best positioned in the Kingdom, and this, you touched on this already, thanks to the Islamic franchise and the low-cost deposit base. But having said that, do you have any concerns about the corporate sector?
Well, actually, we've done quite well in the corporate sector. As you might be aware, we've been underrepresented for many years.
Number 7 in a field of 7, I believe.
No. It's more than 7 banks in Saudi Arabia. We actually grew our share. From 2015, we're 6.1% share. As of third quarter of this year, we're at 7.6. So, which is quite a significant increase over a relatively short period of time. And we've also seen the quality of our book improve. So we now have very much market-leading indicators in terms of non-performing loans, and our level of reserves is substantially higher than the market. So I think we built the book well.